I thought that I had seen every crypto rumor out there until one about Solana stopped me in my tracks. Now, what started as a quick kind of fact check spiraled into a bit of a discovery that changed how I see passive income in crypto. And no, I'm not talking about some meme coin gamble here. There is something bigger, something unfolding right now that almost nobody saw coming. So, the other day, I'm sipping on my coffee when a friend pings me. He says, "Hey, did you hear that the SEC might approve a Solana ETF that stakes for you?" Now, I nearly did a spit take with my coffee, a tradable Solana fund that actually earns staking rewards for its investors. My first thought was, hold on. Is that even real? I mean, the SEC has been slower than a sloth on sedatives when it comes to crypto approvals, right? And staking inside of an ETF, that sounds like a crypto nerd's daydream. So I had to find out if this was legit, because if it is true, then it could change the game for how regular people earn crypto income without even touching a wallet. Now, this dove me into a research mode, right? And what I kind of found blew my mind. On Friday, 7 big name asset managers all updated their SEC filings simultaneously to include Solana staking provisions. So picture this: Franklin Templeton, Fidelity, CoinShares, Bitwise, Grayscales, Van Eyck, Canary Capital, all hitting submit on new ETF documents at the same time. Now, you don't need to be a genius to smell coordination there, right? Now, it's kind of like they all got the same memo. Hey, time to push Solana staking fund. Don't be late to the party. Now, analysts are saying that this coordinated move could signal that regulators gave a subtle nod behind the scenes, basically saying, get ready, we're going to allow this. So, at this point, I'm thinking, okay, maybe there's something to this rumor. Then I see a noted ETF analyst, this is 𝗗𝗶𝘀𝗰𝗀𝗰𝗍, saying approval could happen by mid-October. So that's literally within just a couple of weeks, which in SEC time is like light speed. Now, he mentioned that the SEC recently streamlined their review process, moving away from slow case-by-case approvals to a more standardized approach. The translation: instead of dragging their feet on each individual crypto fund, they're stamping them assembly line style if they all meet certain checkboxes. And Bloomberg's James pointed out how unusual it was for all of these filings to drop together, almost like a coordinated dance with the regulators. By now, I'm fully down this rabbit hole. Right? I'm reading the fine print on these proposed ETFs, and here's the kicker. Each Solana ETF isn't just buying and holding Solana, it's also staking that Solana and passing the rewards back to its shareholders. In plain English, if you hold shares of these ETFs, you would potentially get extra income because the fund is earning staking rewards on the back end. It's as if your stockbroker said, we've got some dividend payments, right? Except the dividends are actually coming from crypto staking. Mind equals blown. Now, this concept, it turns a crypto coin into something like a dividend stock within a traditional ETF wrapper. And that is wild. So let's think about this. Instead of going through the hassle of setting up a Solana wallet, delegating to a validator, worrying about lockup periods and all of that jazz, you could just buy an ETF in your normal brokerage account and just chill. The fund does all of the nerdy work of staking for you, and you potentially get a slice of the crypto rewards. Its convenience meets crypto yields, and if this gets approved, it will be the first time a US regulated investment fund offers yield from a proof-of-stake crypto as part of its product. You know that I had to verify if people even want this, right? Here's a spoiler. They do. Turns out that investor demand for Solana is already heating up globally. For instance, Bitwise launched a Solana staking ETP in Europe, and it saw $60 million in inflows within 5 days. I had to double check that number. Yep, $60 million. That's not Zimbabwean kind of dollars or something crazy. That was real money from presumably rather savvy investors saying, yes, give me some Solana action with yield on top. And here in the United States, there's already a fund called the Rex Osprey Solana Staking ETF, which honestly slipped under the radar when it kind of launched 2 months ago. Now, on its first day, it pulled in $12 million of investments and did $33 million in trading volume. Not bad for day one of a Solana fund. You can fast forward a couple extra months, and the thing has grown to over $250 million in assets. And in a single day, it saw $10.6 million of net inflows. Now, those are some serious numbers. They even restructured the fund from a C Corp to a regulated investment company to save on taxes, which is basically them saying, yep, people like this product. Let's make it a little bit more efficient. It's kind of that, it's like not a sign of, well, I guess that is actually a sign of confidence. And if it isn't, I don't know what is. So by now, I'm just nodding along to myself. Okay, this is real. Big players are moving on in. And it's not just a one-off, right? There's talk that this could set a precedent for other crypto proof-of-stake ETFs. Word is that Ethereum fund managers have been watching closely, even asking if they can do the same with ETH in their ETFs. And I mean, just imagine an Ethereum ETF that stakes your Ether for you, right? The second largest crypto turning into a yield-bearing asset for the stock market investors. Now, one researcher, Marcus, of 10x Research, noted that if the SEC greenlight staking in ETFs, it might change market dynamics for Ethereum. In other words, open the floodgates of interest and money, because suddenly holding an ETH fund could actually earn you those sweet staking rewards too. Now, the Solana filings might be the domino that actually knocks others down, because if they approve Solana with staking, you can bet that Cardano, Polkadot, and every other proof-of-stake project will want the same treatment. So here I am, finding out that Solana, of all things, might become the kind of trailblazer for staking in traditional finance. Not Bitcoin, not even Ethereum, or at least not yet, but Solana, right? And that's kind of like a plot twist where the side character becomes the kind of hero, right? Now, big institutions are taking notice here, right? Grayscale, for example, didn't wait around. They launched a new fund, the CoinDesk Crypto 5 ETF that includes Solana and XRP among others, and it saw $22 million on its first day of volume. And Pantera Capital, these guys are really heavy hitters, said that Solana is next in line for its institutional moment, pointing out that a lot of big investors barely hold Solana compared to Bitcoin or Ethereum. The translation is that Wall Street is underexposed to Solana, and they know it. And get this, they might just be ready to correct that imbalance. Now, all of this had me feeling a little mix of excitement and FOMO, like, have I been overlooking something huge with Solana? Now, I've always been known that it's a strong project. I mean, it's fast, it's got a whole ecosystem, it's full of those shit coins, yada yada. But hearing that 7 giant finance firms are lining up to offer it with staking and seeing hundreds of millions of flows into related funds, well, that kind of is next level, right? As long as they can keep the lights on, it's pretty bullish, right? Now, it's kind of the thing that makes you kind of reevaluate your own crypto strategy just a bit. And that's exactly what I did. See, I've been on a bit of a personal mission lately to find new passive income streams in crypto, making my coins work for me so that I don't just hodl and pray, right? Now, I've been dabbling in the usual suspects, staking on exchanges, some yield farming in places, which sometimes feels like playing whack-a-mole with the rug pools, liquidity pools sometimes, and even a tiny bit of mining back in the day. But with this Solana news, I realized something, right? The big guns are basically copying what crypto enthusiasts have been trying to do for years. Earn yield by packaging it up for the masses. It's validation in a way that those kind of late nights I spent researching master nodes were not in vain. And speaking of nodes, here's where the story takes an interesting turn. Now, while I was neck deep in reading about the Solana ETFs, I stumbled upon a project that I've heard whispers of before, but never really gave my full attention. Unity nodes. Now, if you're not, or at least if you haven't been watching the channel, Cheeky Crypto, or even this channel, you might not have heard about these, or maybe you're even hanging out in our Discord server, because yes, we do have a free educational Discord server. The link is in the description down below. You might actually have been recalling that I've mentioned Unity a fair few times in passing. It wasn't new to me, but I hadn't really connected all of the dots until now. You see, Unity nodes, what the heck is it, right? Well, in simple terms, it's a project that lets you turn your phone into a part of a global crypto network, and you get to earn rewards for it. No, seriously, right? Your everyday smartphone, right? Your Android devices. Maybe you've got a spare one just kicking around somewhere, right? The one that you use maybe to scroll on TikTok or take pictures of your cat. Who knows, right? But it could also be quietly running a node on a crypto network and paying you in crypto for your services, right? So let's think about it like the Airbnb of crypto networks, right? You rent out your device's idle time and power to the network, and you get paid in return. It's a pretty wild concept because it sounds so accessible. Right? You don't need a fancy $3,000 mining rig. Or maybe you do if you want to go at scale here, or maybe a massive kind of stack of 32 ETH to run a validator node on Ethereum. No, Unity is actually saying if you've got a phone, you can actually be and run a node. Now, I'm not going to hype all of this up as the next kind of guaranteed retirement plan, right? In fact, details on Unity node are a little bit scarce, and there's some mystery around them. Now, I've seen people ask, how many nodes are there? Numbers like 6,000 get thrown around online, but I don't know for certain. Honestly, nobody really knows the exact figure for sure at this stage. And I'm not about to kind of spread, potentially inaccurate information. So you should check out the link in the description down below to Unity's official website, and you can read their white paper for yourself. Now, what I can tell you though is that people are talking about it as a novel way to earn passive income in crypto. And it caught my attention, at least enough that I'm including it in my story today. Now, if you're curious, you do check out that link in the description for the Unity nodes, and definitely do your own research. As always in crypto, just don't just take, some random YouTuber's word for it, even if that YouTuber is me. So you might be thinking, why on earth are you bringing up Unity nodes in a video about Solana ETFs? That is a good question. It's because as I've researched, I realized that we're seeing a common theme. We're making crypto work for you, right? Whether you're an average Joe or a Wall Street firm, Solana staking ETFs are about bringing crypto yield to traditional investors on a silver platter. Now, Unity nodes is about empowering individuals anywhere to actually earn crypto in a grassroots way, right? Both responses to kind of the same hunger. People want their crypto to do something, to earn, to grow, not to just sit there idle. Now, one approach is top-down, right? Big funds creating products. The other is bottom-up, a community project letting users participate directly. And I just find that rather fascinating. It's like two sides of the same coin. Pun very much intended. Now, before I start sounding like an infomercial for Solana ETFs or for Unity or something totally different, let me hit pause here for a moment and remind both you and me of something rather important. Now, this might just shock you, but I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies are highly volatile, and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video is for entertainment and educational purposes only. Now, alright, we had to get that disclaimer out of the way because, seriously, right? You've got to stay safe out there. Now, where were we? Ah, yes, the big picture, because by this point in my research journey, one thing was actually crystal clear to me. Crypto moves fast. 1 minute you're reading a crazy sounding tweet about Solana ETFs with staking soon, and the next minute you find out that that's not only true, but it's happening much faster than anyone actually expected. And in the process, you stumble onto other kind of innovations like the Unity nodes that make you realize how much is actually going on beneath the surface of a price chart. Now, the way that I see this We're at a sort of crossroads of mainstream adoption and grassroots innovation. Right? On one hand, you've got the SEC, historically a crypto kind of, I guess, dragon, right? Potentially giving a thumbs up to a pretty kind of forward-thinking product in just a matter of days, complete 180. It kind of makes you wonder. Now, if these kind of Solana ETFs kind of launch, it could actually open at least the floodgates for a whole new wave of crypto investment products. Grandma could end up holding Solana fund in a 401k and earning a few bucks a year in staking rewards without even knowing what staking really means. It's crazy, right? And on the other hand, we have, cypherpunk dream alive and well, projects like Unity reminding us that you don't need to be a big institution to actually participate. And you can be a dude with a phone or a laptop contributing to a network and staking sats, whatever token that might be, for your efforts. Now, this contrast actually gave me a moment of reflection. I was like, do I just want to ride the institutional wave, or also get my hands dirty in the DIY crypto world? And honestly, I think the answer for me is actually both. There's no shame in diversifying approaches here. I might throw a little fun money at a Solana ETF if it comes out, just to see how it performs, maybe through one of my exchange accounts, on BitGet or Blowfin. Those affiliate links are in the description down below. They help support the channel, by the way. And, at the same time, I'm seriously considering setting up a whole bunch of old mobile phones as Unity nodes. And, I've got a whole host of these old Android phones just lying around, just to kind of be part of this grassroots movement and potentially earn some crypto tokens in the process. Maybe it'll be a side business of mine. I mean, why not after all, right? It's like hedging bets on two different visions of the future. Now, let me tell you this, right? This whole deep dive felt like living out a crypto detective story, right? Started off, trying to verify one rumor and ended up with a completely different treasure. It's almost poetic, right? Chasing yield led me to both the highest levels of finance and the more underground community-driven side of crypto. Right, one moment I'm reading SEC filing tea leaves, and the next I'm excited about a phone as a node concept. And if you kind of wrote this as a movie script, people might think, too all over the place. But that's crypto for you, right? It's never just one thing. It's an everything and everywhere all at once kind of situation. Oh, and here's a little fun twist in the saga. Remember how all of those filings came in at the same time? Well, it was noted that they all dropped on a Friday, which was September 29th, 2025. And I can't help but imagine some underwritten coordination. Like all of these companies were waiting for the clock to strike a certain hour to hit send. Now, the conspiracy theorist in me is dying to know if there was a private meeting or maybe a hotline where the SEC said, "Now's your chance, folks, make us look efficient." Now, if the approval does land in mid-October, as predicted, well, it's going to feel a bit like history in the making. The first US staking-enabled ETF. That's one for the books. And it's Solana leading the charge. Who would have thought? Now, as we kind of near the end of this little adventure, I want to zoom out and share my own personal takeaway. It's this, right? Because stay curious and stay open-minded, right? If I had just, brushed off my friend's message as another baseless crypto rumor, then I wouldn't have learned any of this. I wouldn't have a clue that institutional crypto products are evolving, or that a network like Unity even exists to let regular people participate in completely new ways. It reminded me why I fell in love with crypto in the first place. It's like a never-ending story with plot twists that challenge what you actually thought you knew. Now, am I telling you to go out and buy Solana or set up a Unity node? No, I'm not saying that, right? That's for you to decide after doing your own homework. What I am saying is that the crypto space is brimming with opportunities, some flashy and kind of backed by billion-dollar firms, and others are quietly built by passionate communities, right? You might resonate with one path, you might resonate with both. And that's kind of the beauty of all of this. You can choose your own adventure. I, for one, will keep going to keep one foot in each of those worlds. I'm going to keep tabs on the Wall Street crypto moves because, hey, if you can't beat them, you should probably join them, right? At least for a slice of that pie. And I'm also going to be exploring the decentralized, ground up kind of projects that make this space so damn interesting, right? And you bet that I'm going to be sharing what I learn along the way, right here with all of you guys. Now, speaking of sharing, if you've watched this far, first of all, you're an absolute champ, thank you. And I'm also curious, what do you think? Are you more excited about something like Solana staking ETFs making crypto investing easier? Or does the idea of earning crypto with a phone in Unity actually appeal even more to you? Maybe it's both. You can let me know in the comments below, because this is one of those topics where there's no right answer. It's just your perspective and your experience. And at the end of the day, or should I say at the end of this rabbit hole, this journey reinforced that there's always something new to discover in crypto. Just when you think that you've seen it all, boom, something new surprises you. That's why I'm still here, still obsessed, and still sharing all of these stories with you guys. Oh, and one last thing. If you found this video entertaining or enlightening, you can do me a solid by smashing that like button and subscribe button. You can join our little corner of the crypto universe, and I've got a feeling that the next chapter of this story, whether it is the ETF approvals or my experiment with Unity nodes, is right around the corner. And trust me here, you won't want to miss it. So thanks for hanging out with me, and I'll see you all in the next one.